So very often when I was in Asia 2015 to 2018 and got very familiar with the way that regulation impacts access to markets and how from a financial services point of view, we can participate in markets. And the comparison always was that in Korea, they would flag that in 3 years' time, we will change a regulation. And they would then struggle a little bit to get all of the hierarchical decisions agreed to be able to do it, but they would try and aim to hit that target. In China, they would say that there's going to be a change in regulation and it will happen in 3 to 6 months' time. And when you got to the 3 to 6 months' time, there wouldn't be any rules, but the regulation would apply. And then they would fit in the rules afterwards. And then in India, it used to very much be the case that there would be an announcement that the regulation is changing, but it changed a month ago. So that's the way it used to be. And what we're seeing much more now, particularly, and you see with, there's across the whole securities industry at the moment, the move to T+1 settlement. India's got there and gone and done that, and that's on the equity side. But it just gives you that kind of that sense that actually India is making that move away from that lazy stereotype and trying to get that regulation piece in place. It does. I agree with Edwin. It is still there. It's not an easy market to operate in. You need the services of a very well-informed global custodian for starters, and a very even better informed sub-custodian like Deutsche Bank. Other ones are available, but you do need guidance in it as a market, and I think that's been an interesting aspect. Just on the FX component, and I think that's the last point I just wanted to make there. I think here there's been a misconception in the market that FX in restricted currencies must get executed by the sub-custodian holding the account in that market and in that currency. And that's not actually necessarily the case. Alternatives to that are developing. And as a result, it's much, much easier now to be able to access ways to fund, hedge investments across all EMFX, but India is an example of that, without actually having to be tied to a custodian provider to do that. And I think that's an area where a lot of big asset managers, big asset owners, sovereign wealth and so on, they're all starting to look at that and say, let's grab hold of this and manage it a bit more carefully. So I think those were the points I would make, just that the rules are starting to become much more reliable and that we can follow, and that the alternatives for being able to access and then manage those investments are improving.